Vijai Mantri, Managing Director and Chief Executive Officer of Pramerica Mutual Funds, also joins us live. Vijay, fantastic to have you back. Thank you for joining us. Characterize the market environment for us. 3 things which investors they need to know in this current environment.
I think most of the people are banking on the election result in May 2014. As far as global flow of information is concerned, is always a cross current, but if you look at incremental news flow, most of them would be positive as far as the global economy is concerned. And you continue to have some kind of challenges on the geopolitical front that would keep happening. But I do not think anybody going to take a decision on create some kind of a war kind of situation. So I don't think that is going to happen. So in our opinion, the way the market is positioned today, if you look from a fundamental perspective, it is quoting at the reasonable valuation, neither undervalued nor overvaluation zone. Within that, if you see what is going to happen to the market, I think from here onward, the market is going to track the corporate earning. And we see the corporate numbers are coming a little better than what markets or people are expecting. So from these levels, we do not see significant downside risk to the market. At the same time, we do not see significant upside from these levels because most of the positive as far as India is concerned is already in factor in, and that is the reason that most of the international money actually flowed in the Indian market. So this is my take on the market. If you are investing for a couple of years time, fantastic time. If you are investing for a couple of months, is a lottery ticket.
Vijay, what's the sense that you're getting about the cement pack? You know, of late, we have been seeing trading moves, of course, coming in the entire sector. And then again, of course, this entire wholesale deal as well seems to have sort of, prepped up the entire space. Are you bullish on the prospects of what cement may deliver in the next 2 to 3 months?
I think we are positive on select stock on the cement industry because most of the negative actually has been priced in. And if one has to look at revival in the economy, then cement will continue to play a very important role. So not only industrial recovery, but even on domestic front, the recovery as far as the housing market is concerned, the cement is a very important sector to look at. But within that, one has to be very careful in the kind of company one need to buy. And we have also seen a couple of property being sold out. That is our call for last 1.5 years. We continue to see weaker companies giving a space to the stronger companies. So in cement, the same kind of things would happen. Cement looks very interesting to us from these levels and will continue to look interesting at least for a couple of quarters from now onwards.
Okay, let's talk about IT. And clearly, Vijay, for the moment it appears that for the IT sector, there are a lot of headwinds. Rupee has appreciated, the management commentary is rather poor, and we've seen a brutal sell-off in US IT stocks and the Nasdaq is looking weak. Do you think in the short term, when I say short term, for next 3 months, for next 6 months, IT as a group could seriously underperform Indian markets now?
There could be possibility of 1 or 2 months, maybe can extend up to quarter where the IT industry may underperform. If you look at the Nasdaq, most of the stock which went down are the stock which are like without any cash and substantial earning. These are the stocks which ran on ideas, and the stock which runs on idea without fundamental generally give up the gains over a period of time. So that is what we have seen. Solid IT company has not corrected that much. If you look at the IT company, it's very interesting analogy if you compare with India's economic growth. India's economic growth has come down from 8% to 5%, but still 5% is better than many countries in the world. Similarly, Indian IT companies may grow a little slower, but at least there's a growth, at least there's a cash profit, at least there's no debt on the balance sheet and no challenge on the corporate governance. So in spite of all the challenges, I think they will continue to grow. There could be some valuation concern on one or two companies, but by and large, we believe that IT company will continue to do well. The market which was overowning it may come and sell part of it, and that is the reason that prices may come down. But if you look at next couple of quarters, we believe that our Indian IT company will continue to deliver good performance as far as their fundamentals are concerned, and as well as that will get reflected in the stock prices. As far as currency is concerned, our call is that what has happened is that because the step taken by RBI, a lot of money has come in Indian market, and that is the reason the currency has appreciated. But we do not think the long-term trend on Indian currency was of appreciation, because what has happened is completely finance-driven flows. We haven't seen the manufacturing-driven flow. Till the time the trade balance remain against against India, I do not think rupee have a long-term trend of appreciating. So keeping all these factors into consideration, we believe in spite of the warning given or tapering have well-entrenched business model, then I do not see any significant risk to those companies. However, there's a possibility on the mid-cap space where some pharma company would like to cash out, and the kind of cash they get if the entire company gets sold out could be quite substantial. And many companies on mid-cap and a small cap on the pharma side has been promoted by promoters who are in their mid-50s and 60s, and I think they would like to cash out. So that kind of situation may happen. But in large cap space, as things stand, we do not see more consolidation happening because most of the players actually are well entrenched as on date.
Vijay, which is the other important point, which is that why are domestic institutional investors still selling so heavily into Indian equities? In last 2 days, which is Monday and Friday, the DI selling was about 1600 crore plus.
I think what DI, that is life insurance companies and mutual fund companies are doing, or what exactly customers are doing, if the investors who has been tired of waiting for the market and its price to come back, is actually that selling is happening. So most of the selling is by DI is driven by what the end investors are doing. So that is a phase which happens in every market, and we have seen the identical situation in May 2004 around that period, when in February 2000 market, the Sensex hit 6,000 level, then it came down, and then again in May 2004, the Sensex hit 6,000 level. And at that time, we have seen significant selling because people thought from February 2000 when the market corrected, they should have sold in 2000, February 2000, they could not sell. So now they're getting back the price. So in May 2004, around that period, we have seen substantial sales happening from the domestic investor. I think the similar kind of trend is happening right now. But last financial year, we have seen more sell than in this financial year. But I think is always a case where 10 to 15% of the investor would like to exit in this kind of situation. But what is happening is that smart money is slowly moving into equities. And I've been on the ground meeting a lot of distributor and investor. And the smarter the investor is more convinced about investing in equity. A smaller distributor, a smaller investor actually getting out of the equity. The money which they are getting, they are putting in the bank deposit or tax-free bond, or perhaps still buying in gold and real estate. That is fine, you want to do that, that is fine. But take an oath, you will not come back when the Nifty hit 8,000, 10,000 or 15,000 level. Don't touch the equity market at that time if you're exiting at 6,700 level.
8,000, Vijay, when do you hope to see that level?
See, I can't put the time, but our understanding is that if the NDA government comes into power, and I looked at the manifesto, if they implement many things which they are saying, which is good for the Indian economy, if they create manufacturing base and create employment opportunity for youth, there's no reason in my mind that Nifty cannot grow 15 to 20% per annum from this level. If that has to happen, then over a 10-year period, you can put a number, what could be Nifty's number. So our call is very simple. From these level, compared to gold, real estate or debt, equity will deliver not only good performance, but good performance, not beating by percentile, but number of times. So over the next 5 years, which asset category is going to go up 3 to 5 times, I think the call is very simple. The odds today are more in favor of equity than any other asset category.